Trading Market Technicals morning call video for Tuesday, January 29th. Very quiet day yesterday in the markets. Seems like the markets were waiting for something. We did have a mixed bag in our economic data. Now, on the trend cycle, we've been doing really well. So it looks like the economy is starting to expand. It's going to be interesting to see the minutes coming out of the meeting and see if they're going to start talking a little hawkish here, because at one point in time, you're going to have to stop the gravy train, and when that does happen, that may be the initial top for a while in the markets. I mean, the markets have gone literally straight up vertical, and in the last at least all of January and a good part of December, right after the election, when we had that little bit of a dip. But now we really need to see where this market's going to. The market has literally stalled the last couple of days, and that could be a sign of volatility to come. We do have some signs of investors buying puts for protection. I'll get into that with you. But looking at the board here, the durable good yesterday came out pending home sales. And we had a mixed picture here. Case-Shiller today, consumer confidence could be two market movers at 9 and 10. Just keep an eye on that. Also, please watch your earnings. Make sure if you're holding that you have your stock reporting that night or in the pre-market. And if you are, be prepared for that if you like holding into earnings. But we want to go into the charts here. It's going to be a quick session. Really nothing has changed. The only thing that's really interesting is the yield. I've been mentioning for the last few days, reached 2%, maybe even, I believe, over 2%. So that's going to be interesting to see what happens right now with bonds. So if you're an investor holding sensitive interest rate instruments, please be aware of that, and that's why I like to cover all areas. But we'll take a look at that as well. I don't see right now anybody rotating, into bonds at all, or at least taking money out of equities and rolling into bonds. But that could be a longer-term effect later on down the road. But we'll cover that right now in the charts as well. All right, so let's just run into a couple of things here. I just want to show you our bullish percent. Again, elevated up here at 82%, as you can see here with our S&P daily chart. So nothing really to say about that. We're just overbought here. Look at the RSI, 92%, and we've been overbought the whole month of January. And again, overbought is not a sell signal until you get a trigger. And the trigger could be what you want it to be. Price decline. I like looking at price and volume and breaking major pivots with a lower high and a lower lows. Price moving in that direction. So again, that's up to the trader, but just to take a look at, you can see that we're overbought here. Take a look at the SPX. Stocks above the 50-day moving average. Again, still at 91%, highly elevated. Market straight up, literally since our November low. We had a little bit of a dip in December, and then there we go. The whole month of January we've been up. Now, we are down. I want to mention briefly, we're down about 3.5, 4 handles in the minis in the pre-market session. Seems like we have a little softness in the European and overnight Asian session. As far as currencies are concerned, a lot of the commodity block currencies, which is the risk on, if you will, they have been, I've been taking profits, actually, so they've been a little soft as well. So there's something I'm going to be watching in the coming days. Now, like I said, everything doesn't go straight up or straight down, but we are due for a pullback, and at least should be a healthy pullback here. We hit 1503 in the S&P cash, so a little bit of a pullback, believe it or not, is healthy to at least try to get up to that 1575 area. Okay, let's take a look at copper. Copper here still stagnant in this symmetrical triangle. A breakout at 375, you're going to want to look, see, next target would be $4. So if copper breaks out, that's a leading indicator. We want to see copper follow with that as well. Now, here's the thing that I was watching, and this is the 10-year. And if you look at the 10-year, we hit $2 yesterday. And I've been saying, watch this on this bullish falling wedge pattern here. Watch this breakout. That was on Thursday. And look at this, we have a 2. And like I said, again, if you're holding bonds, be careful. Yields are rising. I don't think that's going to affect the short-term stock market as well, as far as equity is concerned. But this is something definitely concerned. We've been in a secular bear market. Long-term rates have been a secular bear market, and that may be ending shortly. So that's something just to consider if you do have some bonds in your portfolio. Okay, and here's an interesting chart I found on the internet. 10-year Treasury rate. If you look at the 1940s, we had Black Monday yields came in, sold off 1940, and we rallied dramatically. And now, as you can see here, we've been in a secular bear market ever since the late 80s. And this could be bottoming. It could be a double bottom. So just something to keep an eye on. Nice to look at. And again, you want to be well-rounded when you're investing in or trading. Now, here's something that that kind of concerns me, and this could be something, and again, I like to really dig in deep when I'm doing my analysis at night. This is the EEM, the emerging markets. Again, we want to see everything in sync, the world markets, right? We want to see Asia. We want to see Asia money flooding into the equities. We want to see it in European, and we want to see it as a whole. And the emerging markets is starting to break down here, and that's a concern for me. But again, this could be a good sign. Maybe this could be the pullback that we're looking for. And if you look at the ratio chart, we have relative weakness to the S&P. And why is that important? Well, if you look at the let me just pull this out here. And if you look at our chart, S&P 500 in red and our emerging markets in blue, you could see we're highly correlated, right, with our emerging markets. Highly correlated. And look at what's happening. We're starting to roll in the emerging markets. That's not a good sign. We just got a little bit of a hook here in the S&P. So this is a concern that maybe this could be a good roundabout of profit taking. Okay, so just keep an eye on the EEM. That's an emerging market ETF, and it's a really good sign. When you see something like this in here, and then you see the copper, and you see commodity block currencies being bid up, this is a very healthy sign, risk on worldwide. Now that we have a rollover and we're breaking down at its current levels, this is another possibility, another red flag for equities that maybe there might be some profit taking here. Okay, a lot of concern going on now for the for what's out there, what's out there to come, the unknown, so to speak. We've been so complacent for so long that I do notice an uptick in put buying. So just something, again, that I want to make the investor and trader aware of. All right, so now let's go into the charts here. Real simple, and I made this a real simple chart on the 60-minute, which I'm going to show you. This is a daily chart, again, just showing you where we are. Inside day from the previous day. We've grinded higher for the last 6 days. We've been up literally 10 out of 11 days. And the Dow Jones actually closed down a couple of points. So really nothing to show you other than how elevated we are. Look at the MACD and the stochastics. But what I'm going to show you is going to be a real simple gauge of we have a trend here, the trend shift. Okay, 60-minute S&P chart. We have literally been up ever since the 2nd of January. Here's a long-term trend line on the 60-minute chart. Now I'm looking at the 60-minute chart, and what I'm waiting for is two breaks. A break of this upward trend line, a break below 149.65 on a closing basis, and then the longer-term trend line, a break below 148.20. Now we have negative divergence showing up again in the 60-minute chart, and this is the stochastics, RSI, and the MACD. This is telling me now we have new divergence setting up, and we've pushed higher. If you remember when I said we had divergence back here, and it didn't play out because we popped back up above it, now we have divergence setting up again. So a word of caution, short-term trend reversal, 149.65, 148.20 on a closing basis. If we get below the 148.20, then I think we got some nice room to the downside, at least to that 200 period on a 60-minute, 145.57. And then obviously we'll reevaluate it. But these are the numbers that I'm looking at for the downside for a trend reversal short term. Okay? S&P daily, CCI well above 100, very constructive. As you can see here, again, overbought. 15.15, 15.20 is the measurement on here on this inverted head and shoulders. We're literally looking for 15 points. I mean, I think that's a pretty close target from way down here, calling that head and shoulder, inverted head and shoulders pattern. Here's a 60-minute chart, very similar to the spiders, obviously. And we have another trend line here, and then a trend line here. And the 30-minute S&P, as you can see, the Bollinger Bands are starting to tight, making this aware of the trader that we have another big move coming, or at least an intraday move. Doesn't tell you where. what side, but we do have Bollinger Bands pinching on the 30-minute chart. So be alert out for a decent move to the upside. Diamonds, as you can see here, very, very slow grind up, but again, up 10 out of the 11 days. So that's something really, I wouldn't be buying longs up here, that's for sure. And even the day trading's been a little difficult. Really nothing has been moving, running across my path anyway. So I'm looking for any type of relative weakness to the market, and or buying on dips if the market doesn't gap up too high, at least stocks anyway. Transportation sector here really looking elevated. We have two indecision candles up here, so a break below yesterday's low and this and the previous day's low, 103.17. At least should send it back down to the 20-day realistic numbers here. This is this could use a pullback. And actually, I wanted to show you, speaking of the transportation sector, I wanted to show you this chart. And this chart here is very constructive, as you can see, right? For the Dow theorists out there. We have the industrials down here, and we have the transportation sector here. And as you can see, look at the strength in the transportation sector pulling the Dow Jones. So that's why you're saying, well, why is the Dow rallying so hard? Well, you have the transports taking it up with it. And obviously, the transportation sector, out of the five that we follow, is the leader of all. If you have the transports running higher, you have NASDAQ running higher, and IWMs, which is the Russell 2000, risk on, that's going to pull the markets up. And then, of course, we want everything else, the world markets, as far as Asia, emerging markets, and Europe also running as well. So that's when you have a good recipe for a big move higher. Now that we've all been elevated here, that's something that that you really need to be aware of. Okay, so back to the charts. IWM, same thing. Nice little doji indecision candle. Only doji's indecision. Can it continue? Absolutely. We need to break yesterday's low on a closing basis to make that any type of a candle, make that valid. 89.30 would be the low of that candle if you're looking to short the IWMs. That would be your confirmation. Your stop would be right above it, 90.29, 90.30, and you wouldn't have to think about it. Okay, Apple. Let's talk about Apple for a second. Now, this is a weekly chart of Apple. We needed to get back above at least 460-ish area. Now, Apple was down in the pre-market, down about 438, which hit our long-term trend line. And I want to show you this Apple weekly chart, which I showed it to you yesterday. We hit that long-term trend line. All right. Now, this here is a good sign that we get a little bit of a bounce from Apple. So we hit that long-term trend line back from 2003, and this could be a tradable bounce here. Here's the daily chart. So we had a negative candle, big engulfing, and we've been taken back by another big engulfing. The market, Apple has had some serious technical damage, and I do think that this is only a bounce, unless something obviously does come out big for Apple. Other than that, I do see Apple trying to probably get above this lower trend line and or try to at least fill the gap here to the 507 area. But as of right now, if you're looking to play this for a bounce, you really, to confirm this, you need to get above yesterday's high, and your stop's got to be way below down here. So you got a huge stop, and I would position size accordingly for your risk tolerance. So if you're looking to do that, maybe Apple sells off a little bit, holds in this range, and then maybe you can get to buy it for another push higher, so you have a better entry, so you can manage your risk a little bit better if you're looking to trade it. I personally am not looking to trade it, but if I see some kind of choppy consolidation, and we could take out some decent resistance, then I'll probably look to buy some calls on it. But other than that, real sloppy chart, technical breakdown. So just be aware of that. If you're looking to trade it, I'd look to be looking to buy on a bounce. I think Apple goes lower eventually. One more big flush. We really never had a big flush, and that's what's concerning for me. Okay, take a look at the Qs. Lastly is the Qs, and as you can see here, we're just kind of stagnant. Just kind of chopping around for the last month, and of course that's due to Apple. What I wanted to show you is our sentiment chart. Last is the sentiment chart. VIX, as you can see here, market participants, investors, traders, starting to buy VIX, starting to buy puts on their portfolio here. So something here to keep an eye on, and our CBOE is neutral at 97. 90.97. So that's neutral, but you can see we do have an uptick in buying, so for protection. So again, just keep an eye, keep everything in perspective here. If you're day trading, obviously it's irrelevant, but you still want to know what side of the trend that you want to be on. Right now, the short-term trend is up until we break those key levels on the spiders on the 60-minute chart. Have a great day, guys, and we'll speak to you tomorrow. Take care.